everybody. Welcome back to another episode of Defining Your Niche podcast. I'm your host, Russell Nersesov, and today we have a very, very special guest, David Perlleshi, who is a commercial real estate broker with Franklin Street. Dave, welcome to the show, man. How are you today?
I'm great. I'm great, Russell. Thank you for having me. It's always a pleasure connecting with you and jumping on the podcast. Thank you for the
Awesome,
opportunity.
man. Awesome. Well, we're gonna have some fun today, simply due to the fact that you and I go back so many years, and we've done a number of deals together. We planned a number of deals together, and I always relied on your expertise, you and Frank, and when I have a question or where I need a counsel. So let's just start from the beginning. Let's talk about you. For all the two or three people out there who still don't know you, considering you recently how big of a social media star you are or became. Let's talk about you. You brokered countless deals over the years. What specifically drew you to the self-storage? What's the story?
Yeah, that's a great question. So I started off my career in real estate back in 2012, and really before that, my family up in New York, they own and manage a lot of multifamily, office, and retail space. So my love of real estate kind of really started in my younger years when I saw my uncles as really kind of real estate moguls in the New York City and New York scene in the business. So I quickly realized I wanted to be in the real estate space. I got an
Right.
opportunity out of college to work in Tampa, Florida for a startup multifamily firm. So I was there for about 5 years. I quickly kind of pivoted into a self-storage, private equity, family office role based out of New York City. And we were buying deals in the Carolinas. So we're buying deals that were 20 to 30,000 square feet of existing cash flowing self-storage space that had room for expansion. So we went ahead and we did all the value add work to those deals on the CapEx side to get them to institutional quality. And then the expansion room at those facilities, we went ahead and built single story or multi-story climatized storage to go ahead and get it to institutional size. So we did about 13 projects over the course of my 3 years there. And then really at some point, a lot of those deals that we were buying were direct to sellers. So we were kind of like carving out, cultivating these relationships with owners throughout, really the Southeast, but primarily in the Carolinas. So fast forward, to COVID, we decided to kind of monetize a lot of those relationships. And we realized, on the broker side, it felt like a lot of brokers weren't, listening to what clients were looking for on the inventory side. It felt like they were more or less just kind of listening to respond versus listening to really understand what they were looking for. So we thought there was a need for brokers in the business that can go out there and source opportunities for buyers that are looking for deals. And then really, after that, it just kind of went gangbusters a little bit with the deal flow, with the BOVs, the listings and transactions. And I think that's kind of at one point when we got in touch in 2021. And Russell, one of your deals was actually pivotal in our business because that deal that we sold for you guys was in Michigan. And at the time, we were only doing deals really primarily in the Southeast, but really the Carolinas. And by doing that transaction, that actually kind of opened up our eyes to doing deals on more of a national basis. At that point, that's when we started really looking at the business and saying, hey, we don't have to do this in one or two states. We can kind of take this national and bring this to the next level. So that's kind of like the whole thing. And it's been a great experience so far on the broker side.
Well, man, that's awesome. That's awesome. And actually talking about a deal that you guys help us sell, that still is. It was and still is one of the largest deals that we've done. And thanks to you and Frank, we actually really got to experience what a true value add turnaround deal, a full circle deal can look and feel like.
Absolutely, Russell. And the creative thing, the great thing about that deal, and I've always talked about this with brokers in the business and just our clients in general, is the beauty of that deal was it was a relationship that was built over the course of years with us and you guys. And then really, it was also a relationship that was cultivated with some of our what people call competitors, right? Other brokers. So EchoCap, that's Scott Rim and Jesse Luke over there. We
Great
actually
guys.
cooperate with them on the buy side of the deal. So we cooperate with all brokers, and I think that's the best way to serve your clients, is by cooperating with other brokers in the business and share your fees. So that was a great story where like you're building a great relationship with your clients and potential sellers or eventual sellers, and then building a great relationship with brokers on the buy side. So when they have clients who are interested in buying and purchasing your deals, you're able to cooperate and share fees. So I think just all around, it makes it a win-win for us, the cooperating brokers, the sellers, and the buyers.
Man, I'm glad you said that, because even now when you call the broker, the first thing they let you know there is no co-broke. To me as a buyer, as an operator, and as a potential customer client, it means that I don't think they're doing the best job for their clients. Because this is a team sport. This is where everybody pulls together to accomplish one goal. And one goal is to have a successful purchase or successful exit. So I'm very happy you guys. So you guys always been good like that, because I know you
Yeah,
work with other
absolutely.
brokers, so that's not even an issue. But I'm very thankful for for
Yeah,
that effort that you guys put in.
of
Let me bring you back to where we're at today. And I know you've been around for a long time. Talk to me about what are the trends that you're seeing today in current market, and also if you can make a comparison between, let's say, the wild west of 2021, 22, and where we're at today. What are the similarities? What are the differences, and what are the trends that you're seeing right now in the market?
Yeah, I mean the biggest trends that I'm seeing right now, Russell, is really just how selective the buyers have been throughout the country. And a lot of them are still market agnostic. They're still chasing yield, they're still chasing opportunities, but they're really kind of like looking at deals. They're dialing in to understand, hey, does this deal check the boxes in terms of population density? Does it check the boxes as far as household income? Does it check the boxes as far as median or average rental rates in the given market? Does it check the box of the size? Does it have the upside availability we're looking for? Is it stabilized, or is it working its way through stabilization? I think that's the biggest shift that we've seen, and people are always kind of saying like, hey, this is what I'm seeing, or I'm seeing different things. But I think that's the biggest shift that we've seen in the industry, is that buyers are very discerning now when it comes to opportunities. So now it's a situation, Russell, where if it doesn't check every box, it needs to be selling for a discount in order to transact. And I think that's the biggest shift that we've seen in terms of our team internally here, is understanding like, hey, where's this deal located? What do the metrics look like? What do the population density look like? What kind of market is here? And then who is going to be the eventual end buyer? And I think that's the biggest problem when buyers go out there and they look at deals, look at opportunities. Sometimes it might hit those yields, it might hit those return thresholds. But at the end of the day, I think people always forget like, who is the eventual end buyer of this
Right,
deal? Really trying to
right.
understand that, because back then you can kind of bank on a 1031 buyer bailing you out, right? Because there was so many transactions happening at that time, and it was easy to do so. But I think that's the biggest trend that we've seen right now, Russell, outside of economic struggles that we've been in, and outside of just headline news that have been keeping people on the sidelines and on pause. I think it's the buyers have been very, very selective and discerning about opportunities out there, and that's the biggest shift we've seen.
Makes a lot of sense. Let me ask you this question, man. Are there more buyers or sellers right now?
There's more sellers for sure.
There's
There's
more
more
sellers
sellers
right
right
now.
now, so I would say it's a buyer's market, definitely.
It is a buyer's market. Okay. Now, let me also ask you another question. What is the typical profile of the buyer? Who's buying today? Are
It really
we,
varies by the deal size, right? I mean, right now, if you have a stabilized core deal, you have the biggest players in the space out there looking at those deals. You have large private equity, you have family offices, the REITs are still very interested, and you will get a lot of bidders on those deals. And this is kind of something we've communicated to a lot of our clients now, and it's interesting to see is, if you have a deal in a solid market and it's stabilized and it's institutional size and it's cash flowing, there's a scarcity premium right now, Russell, for those assets. Yeah. And it's because there's not many out there. A lot of the opportunities out there, Russell, are, CO deals or deals in early lease up or sub institutional size deals that are just kind of like struggling or just kind of hovering around the 70% occupancy range, and economic occupancy is dragging behind that. So that's kind of what we're seeing right now. As far as your mid-size and sub-institutional size deals, it's the same run-of-the-mill groups, right? Your smaller to mid-size, smaller to mid-size equity, family office, syndicators, your first-time buyers, your SBA buyers. So it really kind of varies depending on the size of the deal and the market. But it just kind of really varies on deal size and the deal story.
From my personal experience, not naming the names, but we had a transaction actually where we were in a very solid tertiary market, and we had a very large private equity group coming in and making us an offer. Where my understanding that 2, 3, 4, 5 years ago, they would not be even looking in that type of tertiary market. So I see the trend where the larger groups, in their quest for yield, are willing to go downstream in terms of the it's no longer a secondary market, and they're more than willing to go down to very solid tertiary market. Do you think this is the
Absolutely.
case? Did you see it?
Yeah, absolutely. I mean, I think the biggest thing with those markets is I think they're still very attractive as a whole, Russell. I think the thing that makes those deals tough to transact is these groups can't get scale in those markets. And
Correct.
if they don't have a path to own 100,000 plus square feet or 150,000 plus square feet in that market, I feel like that's where it doesn't really make much sense for them, because historically in these markets and really these tertiary markets, you're not going to see rental rates as high. You're not going to see population density as high. Household income may not be as high either. So you're kind of looking at these markets in a sense where it's like, hey, like, do I want to own one asset out of 10 in this market? Or do I want to
Right.
really corner the market and own 30 or 40% of the assets, where they can kind of start creating economies of scale there and start leveraging their platform on the expense side. So I think that's the
Yeah.
biggest thing on these deals, where it's like, can these groups gain scale in those markets? And I think that's a perfect example for that deal that you mentioned. They had a property in the market. They had properties
Correct.
over there. So for them, it made
Correct.
sense to say, hey, okay, we can just kind of tag this on a little bit, and run a hub and spoke model, or maybe even a hybrid managed model with this deal, and it makes sense for them to do that.
100%, man. 100% right. Well, now let's get a little bit more technical. I'm in the market every day. You're in the market every day. Your job is to sell. My job is to buy. A lot of times I see there is still a tremendous gap between the buyers and sellers expectations. And I know you guys, you and Frank, you guys doing a really wonderful job when you're trying to bring deals to the market at a reasonable price and at what the market will be able to bear. However, there's still a big gap between bid and ask. How do we breach that gap? What do we do? Because we can only afford so much based upon the interest rate, and other factors. But I feel that some of the owners, some, not all, I think it's getting better, but some of the owners are still stuck in 19, 20, 21 pricing a craze. And there are some properties on the market, and I see those properties lingering in the market for quite a bit because they are priced unrealistically. So how do we bridge that gap? How do we come closer to making a deal happen?
Yeah, that's a great question, Russell, and I don't think I have the perfect answer, but I truly believe the way you solve that is by open communication, and by brokers
Sure.
communicating openly with their clients and setting expectations. I think a lot of times sellers will sit there and they'll say, hey, I need X amount of dollars, and they just test the market. And that's not a wise way to go about marketing your deal and a wise marketing strategy. I think a better strategy would be to figure out how you can get to that pricing and what the path to getting there looks like. And really, kind of on the buy side, the biggest issue that we're seeing is that we're not getting feedback from the buyers and from the market. When you list an opportunity, Russell, you want to be able to communicate why the deal doesn't make sense for you. And hey, is it the market? Is it the rates? Is it the condition? Is it where the property is located geographically off the beaten path? Like, is it does it not make sense in terms of like your strategy and your model right now for acquisitions? Like really getting real core feedback from the market and from the buyers for why these deals don't make sense, I think is critical for understanding where values are at, where pricing stands, and where things kind of just overall are shaking out. So I think that's the biggest issue right now in the market. Yes, the deals are priced a little bit more aggressively and they're not transacting for those reasons, but I feel like it's happening from both sides where maybe some brokers are being dishonest to their clients and calling offers lowball offers when in reality, they're not lowball offers. Maybe those are market offers. And they're
Most
advising
likely they are.
they're advising their clients like incorrectly, and they're doing them a disservice by really setting expectations too high. And really in the buy side, where they're not openly communicating and telling brokers why deals don't make sense. And at the end of the day, Russell, I tell every buyer this, and we're a part of multiple groups and we're having multiple conversations every single day in all of our listings. It's like the buyers dictate the market, right? Buyers dictate the value of those deals, right? And if we're not understanding how buyers are looking at these deals and underwriting and give us at the very least an idea of where they should be transacting or what they would transact at, we can't communicate that to our clients. Therefore, we're not sure where the market is. So I would say that's the biggest thing right now is we bridge that gap by open communication, both on the buy side and the sales side, as well as on the broker side by facilitating those expectations.
That's a very good point. That's a very good point. And I think the other thing to say is understanding how important it is to work together with your broker on the buy side and the sell side, of course. Like if I'm the buyer, I need to communicate my underwriting to you, like you said, so you can actually present it to your client and say, hey, this is what the market is, because the market is what the market is. You guys can take the deal to open market, but if it's not priced right, it's just going to stay in the market, and which is not where you're making money. So it doesn't really make sense for you either. So
Absolutely.
I think working together as a team makes a lot of sense. Where you see the biggest opportunity right now in the market, if David would have to come in and say, all of a sudden, I want to start investing in self-storage, and I know you guys own some properties, but if you were to come in and buy more, where would you go and where would you point your client? Let's say I call you, say, hey, Dave, I have some funds, I want to invest right now. Where would you have me come in and start looking at?
Yeah, that's a great question. It's hard to give you again like a good answer as far as like where the best area to invest in right now. I would more break it down, Russell, and like understanding the seller's story. And I think that's where the opportunities lie right now. I think identifying, the non-conventional self-storage investors, right? Maybe it's the people that were in the multifamily space or single family or other asset class and they dip their toe into self-storage. And, I wouldn't say that they're in a distressed situation, but they're in a situation where they want to get out. I think those are where like the deals are to be had.
Right.
I think where there's people like having a little bit of distress. I think there's people, that have built in markets that are maybe a little bit oversupplied and having a tough time with the lease up. And you're seeing a stale lease up period at those facilities.
Right.
That's what I'd be looking at right now if I was buyers is like just understanding the seller story more and seeing where the opportunities out there and not really, finding sellers who are desperate per se, Russell, but like sellers who are motivated to actually transact. I think
I think that's
the
the
biggest
key.
thing right now is like looking for motivated sellers. Now, as far as geographically, per our expansion and what we've been doing as a team, we're, historically just really focused in the Southeast. And now as we've kind of been expanding a little bit more nationally,
Right.
and just due to like a little bit more travel as of the last 6 months to a year, the Northeast New England, right? Like high barrier
Really?
markets. And it's tough to build in those markets. It's tough to put product in those markets. And those markets, you're not going to see the influx of inventory like you see in the Southeast and like where it's easy to build or not easy, but it's easier to build a self-storage facility in the Southeast where the municipalities are a little bit more open to that development, where in the Northeast, it's a little bit tougher and you have to go through rezoning and just overall a little bit more expensive to build. Really, because over there in those markets, Russell, you have, stability in terms of job. You have high income earners. You have limited limited supply in those markets with not much supply coming in the pipeline in those markets. So I really like the Northeast and really particularly like the New England area because you're not experiencing as much rapid growth like you are in the Southeast. However, it's tougher to build. The jobs are there. They're high paying jobs. And overall, I think you're a little bit more insulated and protected with your assets up.
Very interesting. Very interesting. Most of the people I talk to, they talk about different parts of the country, mostly Southeast and South. And
Well, Russell, it's easy to talk about the Southeast. Everybody's moving here, right? So it's like, oh, of course this makes sense. But at the same time, when you're looking at the data and you're looking at the metrics, it's like, okay, well, you're getting people moving here and you're seeing 1 to 2%, population growth year over year. But the amount of inventory you have in this market is going to take 5 to 7 years to absorb. So where's your upside? Where's your rent growth? Can you even account for rent growth in these markets? So I think that's the biggest issue is like a lot of these markets in the Southeast, unless you're just in a very specific pocket, they've been overbuilt, a lot of them. So, yeah.
I could not agree more, man. And me recently moving to Southwest Florida about a year ago.
They're everywhere.
They're everywhere. They're building on every corner. I don't understand. It's already overbuilt, and yet every time I drive by, I see another facility coming up, either Publix or Extra Space or one of the other big guys. You know what? Talking about Northeast, as you know, we have a portfolio in Maine, and nothing for nothing, but I don't think we ever dropped below 94, 96% occupancy in overall portfolio. And you're 100% right. It's stable. There's not a lot of competition. I don't know how difficult it is to build another facility next door because there is nothing but land, but maybe some zoning issue or whatever, which prevents the potential future owners from going in and the building a facility right next to me. But you're 100% right. It is very stable. There is not a lot of growth, like you said, but it's very stable. It's slow and steady, and we continue to push rates. We continue to do what we need to do for our business and our investors. I checked right before we jump on the podcast. I checked the occupancy. I think one of the facilities were at 98%, the other at 96%. So this definitely makes a lot of sense what you said. In your career as a broker, talk to me about, not naming names, of course, but the biggest mistakes that you see these sellers are making. What is the biggest mistake? And then after you're done with that, I want to hear about your proudest deal, the deal that you're very proud of. The
Yeah.
best deal you've done.
So I think, and I've been kind of harping on this a little bit more lately, Russell, is that I feel like sellers, and I think, just for the record, I think brokers get a bad rap where they come across as being very transactional. And I think that's true for some of the industry, and some would argue most of the industry, where brokers come across as very transactional.
Right.
I think buyers, and not buyers, sorry, I think sellers are to blame for a lot of that. We have clients that we're working on deals and we're underwriting their deals, and we get a phone call when they're ready to sell, and they're like, "Okay, I'm ready to sell now. Give me a BOV." Kind of puts you in a situation in a state of panic almost. Like you don't really understand the deal, you don't understand the market as well. You've never been there potentially,
Right.
and you haven't been underwriting it over the years, so you don't understand the story of the deal and what it's been through. And I think that's the biggest mistake, kind of like that, really sellers make in the industry, where they deem when they're ready to sell those deals. And listen, at the end of the day, they're business owners. That's their own prerogative. But I think that's really a short-sighted approach. I feel like the best way to go about selling these assets is identifying a broker that like, and trust. And then over the course of years, updating BOVs and doing valuations. Just like Russell, me and you go to the doctor every single year for an annual checkup to make sure everything is leveled, right? Everything is okay. We should be doing the same thing for our assets, and not because we're motivated to sell, right? It's because we're motivated to understand where the market is, how things are changing and evolving in the market, how this deal is evolving. Maybe this broker is seeing different things and trends and strategies that his clients are doing that maybe you're not doing at your facility, where you can extract a little bit of value there. So I think that's the biggest thing where sellers kind of like have the issue when selling their deals. It's like they deem when they're ready to sell, and you kind of put a broker in a difficult situation where they don't really know the deal. For me, I want to underwrite your assets, Russell, for the last 3 years. And now when I'm able to sell that deal, I could speak
Right.
to that deal intelligently. I could speak to the market intellectually. I understand the assets. I understand the competitors. I understand the things you've done over the course of the last 2, 3, 4 years to get income to where it is now and where we think the opportunity is down the road. So I think that's the biggest thing that sellers have a mistake of, just like in general.
You're making a great point. You're making a great point. You can attest to that. But I call you guys just to talk to. I mean, not so much to, hey, give me a price on my asset, but just to talk to. But that relationship, like you said, it's a relationship built business. You need to have a relationship. We need to have a relationship with you guys. You need to have a relationship with us. And I think this is, if you stay in touch over the years, like you said, I think it's a brilliant strategy. Plus, it lets you stay in front of the owners as well, meaning when the time comes to sell, your name and your face will show up first, and that's where you want to be as well. So makes a lot of sense. Tell me about a deal in your career that you're most proud of,
Yeah,
and
yeah,
why.
absolutely. So early in my career,
And don't tell me it's my deal, okay? Because
not Midland,
that's
no.
not fair.
Early in my career, just on a cold calling day, reached out to an owner, Asheville Mini Storage, and it happened to be on a Monday morning. And it was, the timing is great, right? Like, I think there's no such thing as luck. It's about consistency. And if you're being consistent, you're putting in the work, luck will eventually find you. And the
Right.
first words out of his mouth after introducing myself, he's like, "This is great timing. I was actually in bed yesterday going to sleep, and I thought, like, I'm ready to sell my facility." So it
How
was
often does
early,
that happen? Huh?
yeah, it was early 2022, and that rarely ever happens in our industry. It takes a lot
Right.
more time, and it's not as easy as that. But long story short, mom and pop owner operator. He lived at the property. He had a manager that oversaw the property as well. It's a little over 40,000 square feet, tons of room for
Nice.
expansion, located on Main and Main, great rates. Just really not doing a great job as far as where you can push rates to. And then the overall management with extracting like all the value out of that deal. So we ended up running a call for offers process on that deal. We went to a best and final, and we essentially hit a price that we thought would be really difficult to hit, and we actually got it. And it's still, after checking in with the buy side, they've really outperformed their projections and their metrics on the deal. And ultimately, it's ended up being a great deal for the buyers. And then for the seller in particular, Russell, that was an opportunity where he's kind of owned that deal, and he built it from scratch by buying the land 20 years ago, built a small 10,000 square foot building, bought the adjacent land, and kept doing that over the
Nice.
course of 20 years, built up all this land around the deal, built it to 40,000 plus. And when he essentially sold the deal, there was a lot of extra zeros on their proceeds after he has to pay off the bank balance and so on and so forth. So like overall, the nature of like the deal by him kind of like investing in it early on and acquiring the adjacent land and building as needed, as he kind of fully, as he leased up the space, ended up being just a great story. And the process that we ran on it was overall great. So I think just for us, and for me in particular, it was the biggest deal at that time that I sold early in my career. It was 6 months of the business. In
Nice.
terms of a deal size at $8 million, and just overall for
Oh.
footage. So it was a big victory for me, and the client as well was really grateful for the work that we put into it. So that was probably my greatest deal story.
Awesome, man. Awesome. Sounds like a great deal. I wanna shift gears a little bit. I want to talk to you about. I want to bring you back to 2025 and going forward, 26 and beyond. How important is social media for the brokerage business? And the reason why I'm asking is because every day I start my day by checking my emails and going on LinkedIn, and I see David's face every day consistently showing up, and I get a lot of value from what you're saying, because I think you're taking all the pain points that we all have in the industry, and you kind of break them down into smaller pieces that are a lot easier to digest, and you give a lot of very useful advice. So I really appreciate the effort. But tell me, from your perspective, how important is social media to you, number one, and what effect does it have on your business?
Yeah, no, absolutely. I mean, in terms of how valuable it is like it's hard to break it down in terms of like total like ROI, right? Like
Right, right.
I don't have thousands of sellers and inbound leads calling me and saying, "Hey, I have all these deals available for you to sell.
Don't be modest, man. Don't be modest. I'm
So
sure you do.
it's not that per se, but I think the value of it is really kind of staying top of mind, right? And kind of
Right.
like understanding and talking about a lot of the things that people aren't really comfortable talking about or really putting out there. Um, the way that I look at this, Russell, and look at social media, and I think this is the toughest thing to overcome is, you have to be in a situation or just have a perspective or outlook and not really caring kind of what people think, right? You're going to have people that are very receptive towards what you're
Oh
saying.
yeah.
You got people who aren't receptive. At the end of the day, if 70, 80, 90% of the people reading the content agree with it and appreciate it and like it and it helps them, that's great. The people that don't like it or disagree with it, that's fine, right? And I think that's the biggest fear that we need to overcome as people is like figuring out like, hey, what are people going to think? But really what I break it down to, Russell, and the reason why I started really pushing the social media approach a little over a year ago is as a broker, you can only have so many conversations in a day over the phone, over email, whatever it is. So maybe in a best case scenario, Russell, I'm talking to 50 owners or 50 buyers, or let's just say 75 in a given day from between the hours of 8 and 6. And I'm communicating my thoughts, what I'm seeing, what's going on to those people.
Right.
On social media, you're looking at it as if like you're speaking to a stadium and an audience full of people. So now instead of my message being communicated to 50 or 100 people a day by physically calling or emailing or texting, now my message is being broadcasted over thousands of people who are understanding kind of like my perspective and what's going on. So I think that's the biggest thing there is understanding your reach, and your reach as a broker day to day with phone calls, emails, and text messages is very, very limited. And if you're not doing social media, I think it's something you need to start doing very soon because you're able to reach out to thousands of people as far as what your thoughts are and what you're seeing, and overall how you can improve the industry by creating really a social media presence.
100%. Could not agree with you more. The other factor is back in the days we used to pay for the advertising. We used to place ads in the newspaper, magazines, or radio, whatever. Those are very costly and expensive endeavors. Whereas today, all you need literally just a camera or the iPhone, and you can go ahead and build a million people audience, and you can talk to them daily. And I think you're doing a phenomenal job.
I appreciate
I
it.
want, I want, I really admire that about you, especially your consistency, because I do see something new every day, if not every other day, the latest. Yeah, man, I really appreciate the time you're spending with us. I want to end. We're coming to the close. I want to be respectful of your time. We're coming to the close of our podcast. I want to end on some funny questions that I want to ask you, if that's okay with you. Really, really quick. If David Perlleshi would not be a self-storage commercial real estate broker, what would you do?
That's such a tough question to answer. I played college baseball. I love baseball. I love sports. I think, that has really kind of crafted and molded me into who I am today in a very competitive way, and putting your head down to the ground and just being consistent and practicing every day and you get the results. If I was doing something else, I think I'd be working like front office for like a Major League Baseball team and helping build out, a winning and championship organization. Well, I think
Gotcha.
even if I do something like that, my I guess outside of what I'm doing now, general manager of a baseball franchise. I think that'd be something I'd be doing right now.
I can see you doing that. You're a people's person. I can see you doing that, man. But anyway, listen, we're very thankful that you are not in the baseball and not running a team, and we are very thankful that you're running a self-storage team and a brokerage with your partner. And can't thank you enough, man, for coming up on a podcast and sharing your wisdom with us. What is the best way for anyone who wants to reach out to you, have a conversation with you, to get in touch with you?
Yeah, I appreciate it. Thank you for the time, Russell. Always a pleasure. Feel free to call, text, or email me. My number is 914-365-0752. And then my email is david.perlleshi@franklinst.com. ST is short for street. So david.perlleshi@franklinst.com.
We're definitely going to share this on social media, and hopefully a lot of people will reach out and use your wisdom and your services, man. Once again, thank you for coming up on the podcast. I think we had a great time. Appreciate it, and looking forward to see you again.
Likewise. Thank you, Russell. Appreciate it.